Happy 4th of July weekend, everybody. I hope you're enjoying the holiday weekend, hopefully with some fireworks and a cold beverage. I know I am. This week we're going to look at one of the big American players, Medmen, listed both up in Canada as well as here in the States on the OTC, MMNFF. The big news of the week in the industry is a little bit of management change at Canopy Growth with Bruce leaving, getting forced out. So we can see how important management team strength is becoming in these vertically integrated power companies. And we've commented before on Medmen management's weakness, particularly in how they pay themselves, and a couple of ongoing court cases. So pay attention to our news site for some of those updates. But a really important part of the fundamentals to watch for Medmen. But we're here for the technicals, so let's switch over to the pricing chart and see what we can learn. You can see we're looking at MMNFF again on the OTC. A little bit of upward action this month from about June 14th to the end, up from 272, so almost 70 cents. So pretty good upwards movement for Medmen. Here we're showing Bollinger Bands. We've seen this many times, and I wanted to just remind you what this is so that we can kind of learn a new concept. You can see I also have some moving average envelopes here. So let me take away the Bollinger Bands, and I'm going to add my moving average envelope. And you can see it's kind of the same pattern. There's a moving average, a smooth moving average in the middle, and then an upper and a lower band. This is what we call the envelope. And here you can see I'm using a 14 period and a 5% deviation for my upper and lower bands. That's pretty easy to change. 5% is pretty big. Let's take it back down to 2%. And you can see we get a lot of price movement outside of that 2% range, which is interesting. So the same principles that we've learned for Bollinger Bands, they apply for these envelopes as well. So when price is below the lower band, that's a sign for us to buy. Similarly, when it's above, that's a sign for us to sell. Watch, because it always comes down. This is just pure mathematics. Look what happens during this big price increase. Bounced on the upper line a couple of times before we finally got that moving average cross. And that moving average cross is how you're going to confirm the trend and maybe even get out there. So if we would have gotten in the sell trigger here, we would have ridden it all the way through. This first cross would have affirmed the trend. Maybe we got out here with nice gains. Maybe we were a little stubborn and watched it bounce and then got out here. Finally, this cross, that's going to tell us, all right, we've ridden this long enough. It's now a real trend the opposite direction. I'm going to get out of the trade. Similar but opposite here, right? Up, 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 up. Then we get our cross. So get used to these envelopes. Simple moving averages, smooth moving averages, exponential moving averages, whatever you want to use. Moving average is such a powerful indicator, and there are so many different ways to use it. So start playing around with these envelopes and add them to your arsenal. So positive for Medmen this last month. Let's watch the strength of their management team. Maybe they can mature up a little bit, or they might have to make a move just like Canopy did. So thanks everybody. Happy 4th weekend. Hope you're all well, and keep trading.